So the big tax question is this: how do wealthy people keep their money working for them when selling their business, real estate, or other highly appreciated assets without paying hundreds of thousands to millions of dollars in tax? What if we, as business and real estate owners who have poured blood, sweat, and tears to growing our wealth, and who didn't hire expensive tax attorneys and CPAs to map out an exit strategy, knew their secrets? Instead of recreating the wheel, why can't we just model the way they deferred 30 to 50% in tax, paid off debt, funded their next business dream, and most importantly, leave a financial legacy to give to the causes we believe in most? What if their secrets weren't complicated at all, and you just need a guide who is a few steps ahead of you? That is the question, and this podcast will give you the answers. My name is Brett Swarts, and welcome to Capital Gains Tax Solutions. Welcome to another episode of Capital Gains Tax Solutions podcast, where we believe not having a clear plan to defer capital gains taxes can hurt you, right? And we really want to make sure that you're prepared and you can have different strategies and different ways to build wealth, whether through commercial real estate investing, whether through capital gains tax deferral, and different strategies. So we bring on certain guests to speak on their stories of how they're helping their clients and partners create and preserve more wealth. And our next guest is an expert in commercial real estate. Let's face it, most paid professionals, they really struggle with finding quality investments outside of Wall Street. And our next guest is the host of the Gold Collar Investor podcast and principal of Mesos Capital. He has a master's in information networking and computer science from Carnegie Mellon University. He also manages and controls over $32 million in real estate. He has bought and invested in properties in 5 different states and internationally. His strength is in finding value propositions and has successfully built a portfolio which is cash flowing in the double digits. He's the co-founder of Multifamily Mastermind in New York City group, and he also recently was on a panel of one of the best conferences actually in the U.S. regarding commercial real estate. It's called the Best Ever Conference, and that's held in Denver, Colorado. I want you to welcome with me to the show, Pancham Gupta. Pancham, did I pronounce your name correctly there?
Yeah, it's Pancham. Yes, close. It's good. Yeah,
Okay.
great.
Okay.
Yeah, thank
Excellent.
you for having me, Brett. It's an honor to be here.
Excellent. Great. Well, thanks for being here. And by the way, you can find all about Mr. Gupta at thegoldcollarinvestor.com /download. He has something there for you as well. You can also check him out on his podcast, the Gold Collar Investor podcast. So, Pancham, would you please just give us a little bit about your story and your current focus?
Sure. I came to the United States in 2003 from India to pursue my master's from Carnegie Mellon, and I graduated in 2005. My idea at the time was that I would get my master's, get some work experience, then I'll go back to India, start something of my own. And, I wanted to do something on my own from the get-go. And in 2009, after I got married in 2008, in 2009, we decided that we'll go back, and we had sold everything, pretty much all the furniture. And we found out that, we are expecting a baby, and we're like, oh, you know what? It's hard to move places when you're expecting. So why not just, have the baby and then we'll move back. But that never happened. Plans changed. In 2012, I decided to stay here and started investing in real estate slowly as a hobby and expanded into 5 different states, small properties, and realized that I had a full-time job, pretty demanding in New York City. I decided that, this is not really scalable. My time was getting used so much. I looked into syndications as a business to grow, and I did one, then the second one, then third one, fourth one. At some point, last year I quit my job to do this full time. And at this point, I help many, many high-paid professionals who have the money but don't have the time, either time, energy, or motivation, or the knowledge to invest in alternative assets, especially the real estate, and get all the tax benefits, all the things that you talk about, how they can defer their even capital gains from stock market into opportunity zone funds, for example. We have not done one, but there's so many opportunities out there.
Absolutely. That is absolutely our passion for helping people create and preserve more wealth through tax deferral or tax efficiencies or tax elimination altogether. So I'm curious, before your success, and who was Pancham growing up? You mentioned coming over from India, but I'm curious, what strengths were you given? Not just your story of relocating, but more so, who were you growing up, and what strengths were you given? And that particular strength, how has that helped how you help people today or led you on your journey to what you're doing today full time? Take us back to the early days.
The early days, so I grew up in a middle class family, a business family back home, and my dad was an entrepreneur, and he was also a real estate investor in back in India. So I kind of saw him doing this when I grew up, but I had this penchant for like really, and then I was very analytical, very good at maths, very good at you know. Computers, and computers fascinated me, so I kind of went into computer engineering side. But I always wanted to be an entrepreneur, starting up, growing up, and being an engineer has helped me. And that's what I pursued my master's in, and that's what I spent 14 years in fintech industry doing engineering and financial engineering, so to speak. So that skill has really helped me understand the world of finance and the world of all these alternative asset classes, to where I can figure out all the nitty gritty details of how these things work and put them together for people to understand, or make it very easy for them to understand. My background is in derivatives. For 14 years, I was in building derivative products. And I believe my growing up, being an engineer, being very analytical, has helped me even with that skill set. And I kind of honed it over the years, and I've still applied that, as in this new business that I've started.
Very persistent. Okay, so working hard, being very persistent, and now it's used. And your dad too. It's kind of in the family. Already had real estate kind of in the family over there in India, and so as you had a lot of reasons to move forward. I'm curious. You said you went for the job first, right?
Yes.
And then transitioned into real estate. Walk us through some of that transition, and take us to the moment when you said, I think I was born to be an entrepreneur, or I think I was born to be a full-time real estate investor. Take us to that, from that transition from the W-2 or the job, which I think you just recently kind of switched over fully. What point did you figure it out? And then what were the steps to just fully burn the ships, if you will, and go full
Yeah,
time?
it's a great question, and very, very hard for me. It was very hard for me to make this leap. And I'll take you back from 2005 to 2012 first, that I always wanted to be an entrepreneur, right? And being an immigrant, first generation immigrant in this country, and being from India, it was very hard for us to do anything legally on the side, because I was on a work visa, and I didn't have my permanent residency until 2012, I believe. So I couldn't really do much. But I actually, on the side, started two startups in software before I actually went into real estate. And those didn't go well. They were so-called failures. Or I learned from them, and there were seminars, real life seminars, so to speak. So I in 2012 or 11, I read this book, Rich Dad, Poor Dad, and Cash Flow Quadrant from Robert Kiyosaki. That really changed my mindset completely. And that's when I started investing in real estate. And investing in the US versus investing in India in real estate are two totally, like, North Pole and South Pole, so to speak. They're totally opposite. There, people invest for appreciation, whereas Robert Kiyosaki teaches us invest for the cash flow, right? So that's what I started doing here. Started learning about the markets, and started as a hobby. And I started investing in one, two, three, four single family homes and duplexes and triplexes. And this hobby at some point became, I call this addiction, that where I was, I had my commute of 1.5 hour each way. So 3 hours total. I was spending time learning about this, listening to podcasts, reading books, and spending my nights and weekends on really analyzing deals, talking to all these investors, and using my vacation days to go to these conferences, and not really taking any vacation during when I was working. So it became a passion for me, and I started even raising capital as joint ventures on doing some of these deals, and people started coming back for more and more, and that's when I started looking at syndications. So for me to actually switch from full-time job to full-time syndicator, I it was a very difficult shift because I had a very high paying job. And for me to make that transition from the mindset point of view was very difficult, because everyone around me, whether my friends, my wife, my parents, everyone said, what about this? What about the benefits? What about this high paying job? You don't have any of that income right now. What are you going to do about all of that? And they were right in a way that, and I always told them, they always told me that what if it doesn't work? And I told them, what if it does? So it was, the shift, but still it was very hard. So I actually hired a mindset coach to actually help me quit my job. It was a very difficult, it's a funny story. I went to my wife the day I decided that I'm going to get Tony Robbins master platinum coach to help me with quitting my job. And I went to my wife and I'm like, you know what? I want to hire a mindset coach to help me quit. And she was like, what? I said, to help me quit. She was like, just go quit. You don't need to hire a coach for that, and especially pay someone to help you not make money. You just go quit. And I was like, you make it sound so simple. It's not that simple. So, anyways, I did quit. I did hire a coach, and he did help me quit. So that's how I got around my negative programming over the years that I've had to kind of make that leap.
What a story. And hopefully you've already written a book, or you're starting to write the book, because there's so many lessons there and so many opportunities for you not to pursue your passions, not to pursue your dreams, not to, work hard on the side and do conferences on the side, and still be diligent on your work, but still build the dream, right? It's both. And I think that too often we think it has to be one today, and everything has to, the big domino has to fall over today. But no, you can knock over those small dominoes along the way of your entrepreneurial journey, or your business, or the next real estate deal you're buying. And then eventually all of those small ones, then yeah, you might have to knock over that bigger one. And it may take a mindset coach, right? Whatever it does take, that's the key. Figure it out and take action. So I absolutely love that story. Curious, what's the most rewarding part of what you do now? What about it? Just you love what you were doing. You decided to go full time. So now, what's the most rewarding part about what you do?
So the most rewarding part of what I do is helping people. And I'll tell you that helping people part can be broken down on multiple things. Number one, we try to help investors invest their money, create this passive income for themselves, for their family, and also not pay taxes on that, right? So they have all this money, but they don't know how to invest. So I kind of help them invest that money, and also kind of educate them at the same time. So that's one. Second, we buy these value add multifamily buildings in the southeast. We have 6 cities where we actually look and invest, and in those cities, when we buy these places, we actually improve the overall community. We are helping all the people who are living there, so that we make a good, place that they call home for them to live in, and improve the overall communities. So that's the second way. I love that what I do in terms of helping. And the third way, which you had mentioned in the beginning, was I have this podcast just like yours, where I'm trying to teach about all these things that are not taught in school, right? They're it's all about the mindset. So it's like the education side. So yeah, investing, helping people, in helping the investors with their money problem, or the tenants to create home for them where they live, a nicer place, nicer communities, or the education. All of that is very, very rewarding of what I do now.
Excellent. I love that. So one part of it's very practical, meaning it's an individual family or individual investor. One part of it's very community oriented, improve. Another part is kind of like maybe national or international with education for the masses, right? To teach them through your podcast. So I love those three pegs, if you will. So take us to some examples. Maybe you can share like a deal story or two about how somebody was, let's say, either full-time Wall Street or full-time job, and now they have this extra passive income, and how has that changed their either lifestyle, or walk us through maybe just a deal story that comes to mind for one of your investors.
Sure. I can talk about a deal that we recently sold, actually back in September of 2019. That was our very first syndication. We did about 26, 27 IRR on that deal. When we actually sold it, we sold it within 23 months. We were able to raise the capital. We were able to execute our business plan and actually sell it for the price that we had thought we would. So since it was our very first deal, we raised capital from our very close friends and family members. And one of the very good friend of mine who was only investing in Wall Street products. When I say Wall Street, within Wall Street, it's a very wide term, only stocks and index funds. So that's what he was doing. And he trusted us with his money. And he has since become a very, like, his investor in every single deal of ours. So he has told me stories that how he can actually get this passive income from us, where if he invested, like, for example, 100,000 in that deal, and he was getting 10% return, that he's getting this $10,000 every year. Now he doesn't even have to think about his vacation, so he can use that money towards his vacation and just be done with that one investment. So he also knows that his principal is growing, and he's getting this constant cash flow, and he doesn't have to pay taxes on that, and he does a very good vacation with that money. It's just amazing, right? So he doesn't have to think about his vacations now, right? Because
It
he's no.
truly is amazing, and yet there's so much education now out there, but there's so many people who just still do not know. You're just helping people with an amazing asset such as commercial real estate through syndications, through operators like yourself who have a track record and who are really in it for the right reasons to help people. And then now that produces a passive income, and it's another source that takes pressure off of having to work. And eventually, let's say you can do 10 of these, and you add up,
Exactly.
10,000 times 10. Now maybe you can walk away from a job and have more time and energy. But that being said, let's focus on the taxes, right? Because it's part of our role here at Capital Gains Tax Solutions is helping people with that. So you said don't pay taxes. So walk us through, what's the strategy you use to eliminate some of that tax?
Sure. So there is something called depreciation that comes for all, it's a IRS tax benefit, an incentive that's given by IRS to all the investors who are investing in real estate, where, you can take these paper losses on your returns, which is called depreciation. And with commercial real estate, it becomes even more lucrative, because what we can do is something called cost segregation study. And I don't know if you want me to go over what that is, or sure. Yeah. So what that study does is that it's a way, another incentive on top of the incentive that they already had. Trump's tax law actually did that even more, made it even more lucrative. That means is that you break the building down into multiple components, like it's made up of a roof, windows, electrical panels, the lighting fixtures, the carpet, the furniture, and all of that. So if you break down that building into all these components and you put value against each and every line item, okay, the roofs are this much, and the land is for this much, the electrical panels are for this much, the carpets are for this much, and all of that. If you have that study done and you have all these line items, then you can take pretty much up to 15-year items, the items which will depreciate over the 15-year lifetime, which have lifetime of 15 years. You can take all of that uh, value as depreciation in the very first year of ownership. So what that does is really, for example, at a very high level, a simple example, let's say you buy a building for 1.25 million and $250,000 is the land and the building is worth 1 million. Typically, you can take 30 to 35% of the value, which in this case would be $300 to $350,000 as depreciation in the very first year as a paper loss on your tax returns. So now what that really does is, so any income you make on that building, that income has to be more than $300 to $350,000 for you to pay any taxes. So which is an amazing benefit. And if you add on top of that leverage, this $1.25 million building, let's say you did 20% down, that it would be, 500 to $250,000 that you would have to pay. So imagine you investing $250,000, you have a loss of $300,000, and let's say you generate 10% on that 250,000, that's $25,000. You wouldn't have to pay taxes for I don't know how many years until you reap that benefit. So it's amazing.
It is amazing, right? And that is the power of cost segregation, accelerated depreciation to offset the income. So this $100,000 investor, has $10,000 that's coming in, but it's coming in. He's receiving the cash flow, but on his tax returns, because of the accelerated depreciation, he has zero tax on that.
Exactly.
And that basically will last until that portion runs out. Now, of course, he's just a percentage owner of that total, let's say 350. But essentially, for a number of years, he should have zero. So now let's fast forward to now you go to sell it. Walk us through what's happening with the capital gains tax. Walk us through, you mentioned before the show, we talked about a deal that you did where you maybe paid some tax. Walk us through that a little bit of when does this all come back for the client to pay the tax?
Sure. So, I say this to all of our investors now that if you do enough of these investments, you probably wouldn't have to pay any taxes ever. So for example, we sold this building in September and all the capital gain tax that we have. So if that guy took that $100,000 guy, if he took that money and invested in another new syndication last year, and all the accelerated depreciation or bonus depreciation from that deal will offset the passive gains from the previous investment. So I tell that to all my investors that you can plan out, and it's not that we will wake up one day and sell the building. You would know like 6 months or 5 months or 3 months in advance that we are going to sell this building this year. So you kind of plan it out that way where you are ready to invest that money in the other deal. So now let's say that doesn't happen. Then also there are ways which we have not done, but there are ways to take that capital gains and put towards a newer investment and have not to have pay taxes on it. One is a 1031 exchange. You can do that, but with syndications, it's a little hard to do because of certain nuances with that. There is a way called TIC, tenancy in common structure, that you can do where you take that portion of the capital gains and the entire investment and put it towards the new syndication. We have not done that, but then there are ways where you can do it. Is your do you want me to go into an example of where we could have saved money?
Sure.
And we didn't?
Yeah, sure. Mm-hmm.
Yeah. So I would say that this exact building which we sold in September of 2019 could have been that one building where we actually sold it, but we didn't do any of this tick structure or any planning towards saving those taxes. So we would have to pay capital gain taxes on the sale of this building. even the passive investors would have to pay as well. And they know this, that they will
Yes.
have to. It's not that they don't know this, but this is something that we could have done better, I believe, where we could have designed it in such a way that they didn't have to pay those taxes.
Sure. Yep. And key is planning, right? Getting a plan in place and trying to have a clear picture of what your capital gains tax is, what your depreciation recapture is, and then making sure you execute that plan, and knowing that some of these strategies need to be done. Well, actually, really all of them need to be done, except for the cost seg on the next deal before close of escrow, such as setting up a 1031 exchange, or setting up a deferred sales trust, or doing a tick structure, or some known as like a drop-in swap, where you're moving it into different smaller tenant in commons
Right.
entities. So that being said, pre-plan, and know exactly what the tax is, because it could be anywhere between 30 and 50%. And that's, by the way, the government puts these legal loopholes in place so that the economy and more deals are done, and more jobs are created, and more apartments are built or renovated, or more businesses are started. These are legal loopholes that have been around for decades, that go back to just the study of macroeconomics, which basically states if we can keep money flowing and moving into more business and more investments, it's actually going to spur economic growth. It's like all ships rise, and there's more jobs, more income, and therefore actually more tax revenue. So this is why they put these legal loopholes in place. The key is having a team who's there to help you execute, just like you have maybe a CPA to help you execute on your personal tax return, having a team to help you execute this. So excellent. So let's shift a little bit here. I consider you, really a real estate wealth advisor, right? So after helping countless investors, $32 million in actually real estate assets that you own and manage with your partners, and then being, a speaker at these large conferences, and having the podcast. What's the single, maybe top two, wealth building strategies that you would share?
Wealth building strategies, for me, I'm biased, you can call it. Real estate is the single most asset class that can really accelerate, that has made more millionaires in the whole world, right? And when I say real estate asset class, that means it's not just multifamily. There's so many niche asset classes within real estate, and I feel like I've barely scratched the surface. There's multifamily, retail strip malls, self-storage, mobile home parks, you name it. There's so many of them, right? So I would say learn about one, become really good with one, and just as invest your time and energy and invest with people who know this, or try and learn it yourself and do it. So the real estate is one single most thing I would say is the wealth building strategy. And second, I would say is keep learning. Uh, I read so many books, listen to so many podcasts like yours. Listen to, there's so much information out there, and everyone says that in this knowledge age, information is free. You can YouTube anything, you can go to podcasts for anything, but at the end of the day, you have to take action, right? You have to take action and implement whatever you learn. If you just learn and not do anything, it won't help you. So that's the third thing I would say. So number one, real estate, invest, learn about real estate, invest with people. Second is the uh,
Keep learning.
keep learning. Yeah, keep learning, and then take action. Yeah.
So we're going to go into the lightning round. You ready?
I'm ready. Let's go for it.
All right. Maybe your favorite book you've read recently, and it could just be Rich Dad Poor Dad too. But maybe there's something that you caught your eye in the last year, or you say, "Yeah, I recommend this book."
Yeah, I would highly recommend Turning Pro by Stephen Pressfield. It's Turning Professional. That really helped me when I was going through this transition from full-time to, full-time job to full-time syndication. It really, really helped me, that book.
Excellent. Favorite podcast you're listening to now?
Favorite podcast that I'm listening to? I would say I'm more listening to the mindset related podcasts these days. So my favorite one is by Lewis Howes. He is doing the School of Greatness. His podcast is School of Greatness, and it's a good one.
Best vacation spot in India?
In India, Goa. It's a place. It's a beach spot. It's like Miami of India.
Best sport in India?
Cricket.
I've always wanted to play cricket. I never have, but it just looks so fun. Everyone's always seems like having a great time when they're playing it. So, okay, great. So that's it. We're gonna finish with one last question, and then we'll be finished. And this is really the I think the most important question, really, for our listeners to connect with you and just understand a little bit more of how you keep going when things get tough. So, curious, how do you stay centered in your values and encouraged to charge forward to reach new goals?
So that's a great question. I would say I'm trying to develop at this point some daily rituals that I do to keep myself centered and really make sure that I'm working towards my goals and really not deviating from them and also growing. So one ritual do you want me to share that? Yeah. So
Please.
one ritual that I do is by this guy. He wrote a book on this, Miracle Morning, Hal Elrod. He suggests this routine called Savers, Savers. So I try to do that routine every day. I'm not successfully doing it every single day, but I'm getting there. So that's one thing that I do. And the other thing is that I'm reviewing my goals at a weekly level, making sure that I'm not deviating from them. Whatever I had, I actually attended a 3-day goals retreat in Las Vegas in January of 2020 to just work on my goals. And now what I'm doing is reviewing them. Try to do that weekly, if not weekly, bi-weekly, to make sure that I'm staying true to those goals.
Awesome. Yeah, I love Miracle Morning. And for the listeners, he's referring to it's an acronym, and the first one is silence. The second one is affirmations. The next one is visualize your day.
Right.
The next one is exercise. The next one is read something.
Right.
And then the last one is silence.
And the last one is scribing.
I'm sorry. So some kind of journaling or scribing or writing down. And then, of course, reviewing your goals so that you can stay on track and not deviate from what I think that, we've all been given a mission. We've all been given gifts. And it's so easy to be distracted in today's day and age. But if you can review your goals daily, weekly, if you can practice some kind of rituals that are going to help you put you in the right mindset and stay focused on your goals and values, then you will not regret it. So, I want to thank you, Pancham, for being here on the show. Any last words to leave with the listeners? And by the way, you can find Pancham at thegoldcollarinvestor.com and /download. He has a gift for you there. And as well, second, you can find him at the Gold Collar Investor podcast. Pancham, any last words for our audience?
No, I would just say that, be persistent. Just don't give up. That's the key to success. Yep.
Great. Thank you so much. And I want to thank our listeners for listening to another episode of the Capital Gains Tax Solutions podcast. As always, we believe having a clear plan to defer capital gains tax and invest in commercial real estate assets that are going to give you tax deferral, are going to give you tax write-offs, going to eliminate taxes altogether, using plans or options such as cost segregation, 1031 exchange, the deferred sales trust is the best way to grow your wealth. And with that, reach out to Pancham, especially if you're in the New York area or anywhere on the East Coast for potential multifamily investing opportunities. Thank you so much again, and look forward to seeing you on the next show.
You have just listened to another information-packed episode of Capital Gains Tax Solutions with Brett Swarts. We hope you enjoyed today's show and found it helpful. Visit capitalgainstaxsolutions.com to access the show notes and to access more resources. Don't forget to leave a review and join us again next time.